Hi everyone, this is Brian Neal with TradeToBeFree.com. I want to talk today about the market conditions right now and where we see the market heading and kind of give you a play-by-play of the higher volatility we've seen over the past few weeks. Back on Thursday in the daily alert around the first of the month, we went bearish. We saw this bearish confirmation signal here, and since then this market has dropped by about 6%. From high to low, from that point to the low here. And what we've done so far is we rebounded, and we were hoping to get above the 50-day moving average and the 20 EMA and these key moving averages here and hold above there. And instead we came back up, and like we said, we thought we'd reject this area here and pull back some more, and we did. Now we're finding support though at the prior low, which is a better sign than just a knife right through it, slice right through it, and continue on. So that's maybe a good sign here. We'll have to wait and see. This could just come back up, maybe touch the 20 EMA, or just find resistance here at the 9 EMA now, and then make another move lower from there. So that's what we have to watch out for. And right now we've got a lot of volatility in the market, and it makes it tough both long and short. Now our top short setup this week was Flow, and Flow already hit our around our first target. The first target was right around 32.50 on a short, and it looks like we already made that, tested that area a couple times already. So hopefully you took some off from that point. There was two chances here to take some off there, and we're probably due for a rebound on this to bounce back up, maybe test this area, and then come back down potentially. We'll have to see on that, but that got off to a good start. As you can see here on a year and 9-month chart on the S&P 500, we're basically back in the range we've been in over the past year and a half to 2 years, starting in late January of 2018. We're back in that range, and the low is of the range is through here, and the upper bound is up here. Okay, we started to break out, and now we're back in there. We had the bearish signal, and we're apt to come back and test this 200-day moving average and come back below there too. But we'll have to see. At this point, most of our long strategies are mostly off the table. If we do get a high type flag breakout, that we will still jump on that. This morning we saw a couple breakouts that were pretty close to high type flag breakouts. We saw APPN, which had a really nice daily chart, not quite a high type flag, and didn't meet all the requirements in the course. But these marginal plays, when they start breaking out and make a nice clean move higher, like this one did, this one moved up like 5-6%. Okay, and then we had another one on ARWR, I believe it was, and Arrowhead Pharmaceutical, and that too, broke into the new highs. It went about 2.5%. 2.5-3%, held those levels in a narrow consolidation. So it's another good breakout there. Again, it didn't have all the requirements met in the course, but when you start seeing these type of strong flag breakouts that hold and start moving higher, that's sometimes a good sign. If we do see a high type flag breakout that does meet the rules in the course, we'll still play that. Everything else pretty much will be more careful on. Maybe if we see a real good earnings eruptions trading opportunity next week, we'll get long that if it sets up real nice. So, but it's still a time to be careful. Look for the best short opportunities, and just watch these breakouts here and see how they hold, and wait for those big earnings flag breakouts that might come up later this month if the market does get above the key moving averages, get above the 50-day here and 20 EMA, and hold above this prior high. So you can see now that we have this downtrend where it found support around 28.20 for the S&P 500. It came back up. Didn't start a new downtrend until here, really, when we had these two lower lows in a row. So this is more of a downtrend here, okay, to test those prior lows. Now we're coming back, and we'll see if we can get above these prior highs and hold there and close above there and break above that point. That could be a good opportunity to go long, and we can hope that this next leg in the market is starting. Let's hope, but we'll see if we actually confirm the trend back to the upside on this shorter time frame to continue the longer term almost decade long bull market at this point. So I just want to give you an update on that. And one of the big concerns right now is the 10-year Treasury yield. It just seemed to fall out of bed over the past week or two. And I've heard today that the election in Argentina, I believe it was, caused a lot of bond holders to dump positions there and move into treasuries in the U.S. And there's money fleeing from other countries too to go into the U.S. and the U.S. treasuries. So a lot of investors are probably waiting for this 10-year treasury yield to stabilize and figure out where that's going to end up, or if it's going to be a very sort of disruptive, more disruptive pullback lower than this. But right now we've already gone down to 1.5%, actually a little below 1.5% yesterday on the 10-year treasury yield. And if we go back 6 years, we can see that we're getting close to testing the multi-decade lows for the 10-year treasury yield. Down to 1.336% is where we got back in 2016. So let's see if we come back and test that area in the days and weeks ahead. And so I just want to give you a quick update on that and where we stand. Again, we're watching this level right here to see if we can get above there and hold. Again, the high type flag breakouts, if they come up and if they break out with all the rules met in the course, we'll still be jumping on those. And everything else on the long side we'll be very careful with, more or less avoid, again, unless it meets all the requirements in the high type flag strategy that we have on the site. Stay tuned over the next few days or a week or two, and things can change quickly. We could continue this downward bias for the short term and come down and right through the 200-day moving average and go lower. So we have to watch that. This could be an ABC move down, where the full projection of that would probably take us to about 2740 in this area. This prior low here was at the beginning of June. So we may come back and test this, and we'll see if we can hold that and see what happens at that point with the market, if that's where it wants to go early next week. So, all right, that's about it for now. We do have an update to the bottoming course due out in the next few days. I'm going to talk about the explosive bottoming patterns that we had in 2019 so far, and the way we're trading it now in 2019. We're getting a little more specific with those and watching for a few key signs before jumping in on those. So if you have the bottoming course right now, you'll see that. You'll get free access to that update. And if you don't, there should be some really good bottoming patterns that come up on top stocks in the weeks ahead. So you may want to check out that course on the site. As always, you can get a 3-week free trial on the site for the alert service. And when you do that, you can see all of our past trading opportunities that we featured to clients over the past few years. So it'll all be in there, and you can click the charts within the alerts to see the latest chart and see exactly how each one performed since being featured. But again, it's important that the stock reaches the technical entry point that we talk about in the commentary to again confirm the trend in your direction. Right now the short-term downtrend in the market is being challenged down here, and it may confirm a trend back to the upside, but we haven't seen that yet. So as with the stock, we want to see the market trending in our favor as well, and right now it hasn't confirmed the trend back to the upside. So all right, that's about it. Best luck in your trading. Leave a comment below if you have any comments or questions, or email us at info@TradeToBeFree.com, and I'll incorporate those questions into the next video.